Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings, and today we're looking at Hudson Technologies Incorporated, and boy do they have a surprise up their sleeve. Imagine a company that is not just growing, but aggressively expanding by buying out its competition. That is precisely the story unfolding with Hudson Technologies Incorporated's latest filing, revealing a significant acquisition. So what does this mean? Well, on the 17th of December 2025, Hudson Technologies announced they bought the assets of Denver Refrigerants, which does business as Refrigerants Incorporated. This is not your typical everyday announcement. It's a move that signals a big push to grow their market presence and likely their revenue. Think of it like a smaller grocery store buying out a similar store down the street. They become bigger, potentially reaching more customers in that area and gaining more purchasing power. Hudson Technologies Incorporated is known for its work in the refrigerant sector, dealing with things like refrigerants used in air conditioning and refrigeration systems. They're essentially a key player in keeping things cool, both literally and commercially. Their stock is traded on the Nasdaq Capital Market under the ticker symbol HDSN. This acquisition is a bold step for them, showing they are not content with their current position, but are actively seeking ways to dominate their niche. This particular document is a Form 8, which is like a special bulletin from a company. It is filed when something really important happens that shareholders and the public need to know about quickly. So when you see an 8K, there is big news, and this acquisition is definitely big news for Hudson Technologies. It means they are actively shaping their future, and their expansion plans go beyond organic growth. They are also looking at strategic moves to consolidate their market share and potentially gain access to new customer bases or technologies. The filing points to Exhibit 99.1, which is the official press release about this acquisition. While we don't have the full text of that press release embedded here, the filing itself tells us the core of the story. They acquired the business assets of Denver Refrigerants Incorporated. This suggests they are acquiring the parts of the business that make it run, like its customer lists, its contracts, maybe even its inventory or operational facilities. This means more than just a name change. It is about absorbing a functioning business. This move is a classic example of a company looking to increase its leverage in the market. By acquiring a competitor, Hudson Technologies can potentially reduce competition, achieve economies of scale in purchasing and operations, and expand its geographical reach. Think about it. If you're a customer, you might now only have one more option for a key refrigerant supplier in your area, and that option is now bigger and potentially more influential. It's about building dominance through consolidation. While we don't have detailed financial tables in this specific snippet focusing on the acquisition announcement, the implication of buying another business is always financial. It means new revenue streams, new expenses, and a change in the company's overall financial structure. The value of Denver Refrigerants Inc. would have been assessed, and Hudson Technologies would have planned how to integrate this new financial burden and, hopefully, a new source of profit into their existing operations. Stakes game where the success of the integration directly impacts the company's bottom line and future growth trajectory. Now, looking at this development from a broader strategic perspective, Hudson Technologies is signaling a clear intent to grow aggressively. This isn't a company sitting back and letting the market come to them. They are actively reaching out and acquiring assets to strengthen their position. The big question now is how smoothly this integration will go. Acquisitions can be tricky. They need to merge cultures, systems, and customer bases effectively. If they get it right, this could be a major catalyst for future success. If it's rocky, it could drag down their performance. Hudson Technologies Incorporated seems to be charting a very ambitious course. By actively acquiring competitors, they are demonstrating a strong will to lead their industry. This strategy, if executed well, can lead to significant market share gains and enhanced profitability. However, the key always lies in the execution. Integrating an acquired business is a complex process, and potential challenges include merging operations, retaining key personnel from the acquired company, and ensuring that the expected financial synergies are realized. The company's leadership appears confident in their ability to manage this expansion, but the real test will be in the coming months and quarters as the impact of this acquisition becomes clearer in their financial reports. Alright, that is our breakdown of this interesting move by Hudson Technologies Incorporated. What is your take on this acquisition? Do you think it is a smart move that will pay off for the company and its shareholders? Or does it feel like a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives. Don't forget to check out our Discord community linked in the description for more discussions on corporate finance. Thanks for watching. See you next time.